So guys, let's actually look at a bullish market condition to actually understand the fractal nature of price delivery. So you can see that this actually symbolizes the major market condition, and then this symbolizes the minor market condition. So basically what I'm trying to say is this signifies a higher time frame market condition. This signifies a lower time frame market condition. So the higher time frame could be daily, the lower time frame 4 hour. The higher time frame could be 4 hour, the lower time frame is 1 hour. So now you can see that in the higher time frame, we actually have a bullish market condition. Because what you can see is that we have the market giving us a series of higher highs, higher low, higher high, higher lows. We have the impulsive leg move that broke this swing high points, created a new high point, which is now a higher high. Price gave the impulsive leg move, broke through the swing high point. We have a newly created high points. So now what you can see is that within the impulsive leg move, we are having the minor market structure. So also within the corrective leg move, we are also having a minor market structure. So now what you're going to see is we have an overall bullish directional bias. But in that bullish directional bias, we are also having bearish market bias. So the bearish market bias in our established directional bias in the higher time frame is actually the minor market condition. It is not actually saying that the overall bias of the market is now bearish. So you can now see that in the higher time frame here, we have a bullish market condition. So you can see in alignment to the impulsive leg move, which is in the direction of the trend, we have also the lower time frame structure giving us a bullish market condition, because you can see series of higher high, higher lows, higher high, higher lows, higher high, higher lows. But then now you can see that now we have price drop to the downside and then broke this higher low point that created this higher high. So some may mistakenly take this as a reversal in the markets when you actually just base your observation on the lower time frame and neglect the higher time frame, which is actually giving you the major market condition. But when you actually establish from the higher time frame the major market condition, then you would realize that this bearish market condition is just a pullback leg move in the higher time frame. It is not actually a reversal market condition. So now you can see now in the impulsive leg move, we have this, you definitely know that the impulsive leg move is actually a bullish move. So in the impulsive leg move, we have a lower time frame market structure, which is also bullish. Now in the corrective leg move, which is actually a bearish market condition. So you would see that in the lower time frame, you're going to be seeing a bearish market condition. We're going to be seeing the market is giving a series of lower highs, lower lows, lower highs, lower lows. That doesn't mean that the market condition, the overall market condition, is now bearish. No, it is just a pullback leg move to the downside for price to come retest a zone within the impulsive leg move, and then we have the continuation to the upside. So this is why I said we must understand that the market is actually fractal in nature. You would find structure in higher time frame, and then in lower time frame you're going to find structure. So let's take the major market condition as a market condition in a daily time frame, and then this minor market condition is actually a market condition in a 4-hour time frame. So you can see now the 4-hour time frame in this corrective leg move is actually establishing a bearish market structure. But this is just a corrective leg move. It is not a directional bias to the downside. But though in the lower time frame, it is a bearish directional bias. So next, what you must understand is, the market does not just move in a straight line. The market does not just move just where we see here. The market gave this impulsive move. You just have a straight movement to the upside, straight movement to the downside, straight movement to the upside. No, you would see that the market is giving you this particular kind of waves when the market is moving. So you must understand that this is actually now the bullish market condition. But then you would see that you're going to be having structure within that particular established bullish directional bias. So which is actually going to be a market condition in a lower time frame. So you can see we are in a bullish market condition, but here you can see we have a bearish movement to the downside. That doesn't mean that the market is actually bearish because you see the violation of the swing low points. No. So the market is actually fractal in nature. So you can see that the structure in the higher time frame is bullish because we have series of higher highs, higher low, higher high, higher lows. But then you must understand that the market moves like a wave. It is not just a straight movement to the upside. This is actually the USD to the Swiss franc. So now what you're going to see is that this is the 4-hour time frame. You can see that in the 4-hour time frame, this is the structure within the 4-hour time frame. I've shown us this chart example. But in the daily time frame, this is the structure. We have the low, the high, the higher low, the higher high, the higher low, the higher high, the higher low, the higher high, the higher low. So this is the daily structure. We're having a bullish market condition. But what you can see here in the 4-hour time frame, you can see that we have in this impulsive leg move of the daily directional bias, you have in the 4-hour time frame, we are having this bullish market condition. We have price created this high, price pullback, push to the upside, created this high, pullback, push to the upside, created this high, pullback, push to the upside, created this high, pullback, and then price broke this low point. So that doesn't mean that the market is bearish. So this is just bearish move in the lower time frame, which is actually the 4-hour time frame. But in the daily time frame, it is just the corrective move. Because in a bullish market condition, the corrective leg move is actually a bearish move to the downside. And then the impulsive leg move is now a bullish market condition. So you can now see we have the push of price to the upside. Price went to the upside, broke this high point. Price realigned itself to the main directional bias. So this is actually for a bullish market condition. So now you can see that this is the daily time frame. Now what you can see in the daily time frame is this is the impulsive leg move, this is the pullback. But then when you drop to the 4-hour time frame, this yellow line is actually the structure within the 4-hour time frame. Where you can see it is not easily identified in the daily time frame as structure. When you drop to the lower time frame, you can mark out the structure. So you can see we have what? Structure within structure. So we have the daily time frame as a bullish market condition. And then you can see we're having the 4-hour time frame within the daily structure. So this is how you actually identify the major market condition from the minor market condition. So now let's check out the bearish condition. So in the bearish condition here, you can see that the overall directional bias is actually bearish because we have the market creating lower highs, lower lows, lower highs, lower lows, breaking structure to the downside. So you can see in the impulsive leg move, we have a bearish market condition in the minor market condition. So you see, we have the major market condition, which is bearish. In the impulsive leg move, we have the minor structure, which is also bearish. The pullbacks gives us what? Bullish market condition. Because you can see prices creating what? Higher highs and higher lows in the pullback leg. Now price returned to the downside, gave us this high point. Price dropped to the downside, broke this previous low point. So you can see now price realign itself to the major directional bias. So you can see that words, the market is actually fractal in nature. You see structure in higher time frame. You also identify structure in the lower time frame. So now what you can see is just the way I've explained with the bullish market condition. The market does not just move straight to the downside, pull back straight, drop to the downside, pull back, and then no, it moves in a wave form. So now you can see that we have price push to the downside, pull back, push to the downside, price push, pull back, push, created a high point. This is the low point. We have this movement to the downside that broke this swing low point. So we have a breaking structure. So you can see we are having a bullish market condition in the pullback leg move. And then we have now a bearish market condition in the impulsive leg move. We're having a bullish market condition in the pullback leg move. And then we resume the bearish market condition in the impulsive leg move. So this is how the market moves. It doesn't just move in a straight form to the downside, straight form to the upside. So now let's look at chart example to that. So this is the Euro USD. This is the 4-hour time frame. So this is actually the daily market structure. the thick black line you're actually seeing. So we have price creating lower highs, lower low, lower highs, lower low, lower highs. So we have a downtrend market. So if you can observe, now you can see in the 4-hour time frame, we have structure within structure. So we have the 4-hour structure within the daily market structure. So now we have price pull to the downside here, price push to the upside. We have push to the downside, price broke this low point, give us a pullback, push to the downside, broke this low point, pullback, push to the downside, broke this low point. So you can see we have the bearish move in the 4-hour time frame aligning itself to the daily impulsive leg move. And then now we have the corrective leg move giving us bullish market condition. Now we have the impulsive leg move to the downside, price push to the downside, took out the swing low, price pullback, push to the downside, pullback, push to the downside. Now we have the corrective leg move giving us a bullish market condition. So now you can see the fractal nature of the price in the market. Now you can see this is now the daily time frame so that you can see the picture clearly. You can see in the daily time frame we have the high points, price push to the downside, took out the low points, price created this low, push to the upside, gave us the lower high, price push to the downside, took out the swing low point. So you can see this is the entire impulsive leg move. But what you can see in the 4-hour time frame is you can see that we have structure in the 4-hour time frame also. And so this is the entire impulsive leg move. And then you can see we are having what? Bearish structure from the 4-hour time frame. Now this is the entire corrective leg move. And what can you see? We are having what? Identified bullish market structure from the 4-hour time frame. So this is how you must look at the charts. You must establish your structure from a higher time frame so that when you drop to a lower time frame, you don't get confused by the structure in the lower time frame. So meaning you trade in confluence with a higher time frame structure. So now in a lower time frame, when you see the break of this high, you can see this is a reversal. But no, in the higher time frame, where you can see we're still in a bearish market condition. This is just a corrective leg move, a pullback, a retracement to the upside. So now you can see that also when we are actually in a market condition that leads to a reversal, you can see the major market trend here is actually bearish. The major market trend here is bullish. So you can see this blue line is actually the minor market condition. So you can see that now we have price took out the swing low points. Price pushed to the downside, gave us the impulsive leg move, pullback, created this high point, pushed to the downside, took out the swing low points. Now, what you're going to see here is price in the impulsive leg move in this bearish condition is giving us bearish structure in the minor markets condition in the lower time frame. Now, when you see that price pushed to the upside and then price took out this high points, this doesn't mean that the bias of the market is now bullish, but rather this is just a bullish move in a lower time frame, signaling just a corrective leg move in the higher time frame. And then you can see price return to the downside. We have the pullback, price took out this high. This is not saying that the market now has turned into a bullish directional bias. No, this is just a lower time frame change in the market condition, but the higher time frame is still bearish. And then price fell to the downside, created this lower low points. Now you can see this lower low point sponsored the move to the upside that broke this lower high points. This is when we now have the major market structure shift. This is just a minor market structure shift based on the minor market condition. When price took out this high point, this is just a minor market structure shift. That doesn't mean that the market has turned into a bullish market condition as the overall directional bias. Until when price breaks through this high point, then we have a full market structure shift. Meaning now the market is no longer bearish, the market have turned into a bullish market condition. And you can see we have the pullback and then price continued to the upside. So you can see how price is fractal on every time frame. meaning what you see on higher time frame also happens on the lower time frame, even more often. Because now you can see we have, in the higher time frame, we have a bearish market condition. But then in the lower time frame, you can see we have bearish, bullish, bearish, bullish, bearish, bullish, bearish. So the markets or price delivery is actually fractal. There is structure in higher time frame, there is structure in lower time frame. And the structure in lower time frame occurs more often. That is why you must establish the structure, the trend in the higher time frame always before going down to the lower time frames. So this is what you must understand about the fractal nature of price. So now let's look at this example. This is actually the 1 hour time frame. So meaning we're going to identify the 1 hour structure. So we establish the structure from the 4 hour time frame. So the 4 hour time frame is the higher time frame. The 1 hour time frame is the lower time frame. So you can see the structure from the 4 hour time frame. We have the impulsive leg move, the corrective leg move, impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive. Now price push to the upside took out this high point. So we have a market structure shift. But now what you can see in the lower time frame, in the 1 hour time frame, we have this impulsive leg move. We have a pullback, impulsive pullback, impulsive price push to the upside took out this high. That doesn't mean that the overall direction of the market is now bullish. No, it is bullish in the lower time frame. So it is a minor structure. Now price continued with the trend to the downside. Price gave us the pullback, which is actually a bullish condition. Price resolved to the downside. Now this is when we have the shift in market structure, when price pushed to the upside and took out this high points. Now you can see this impulsive move took out this high point. This is a minor market structure shift until price takes out this high points before we actually have a major market structure shift. And then price took it out and also took out this. And then you can see we have pullback to the downside, push to the upside. So from a bearish market condition to a bullish market condition. So let's check the 4 hour time frame. So you can see it here in the 4 hour time frame. You can see in the 4 hour time frame we have the impulsive leg move. This is the ideal pullback in the 4 hour time frame. But then you can see in the 1 hour time frame we're having a pullback here, and then price fell, took out this low, pullback, and then pushed to the downside, took out this low. But what you can see in the 4 hour time frame, we're just having this as the impulsive leg move, and then this as the ideal pullback. And then we have the impulsive leg move, this as the ideal pullback. Impulsive leg move, this as the ideal pullback. But when you check the lower time frame, you're going to see that we have structural move to the downside, took out this, pullback, move to the downside, took out this, push to the upside, and then we're having this bullish condition. But when you check in the higher time frame, this is the entire corrective leg move. And then price push to the downside, give us the corrective leg move, price push. Then now we have the movement to the upside that took out this high, leading to the what? Market structure shift. This is the ideal pullback. Where you can see in the lower time frame, you would see that you have this as a pullback here. Price took out this. That is just a minor market structure shift. But this is the major swing high point. Until price violates this, we do not have a reversal condition. So this is how you must actually look at the chart. You must establish the major market condition and then the minor market condition, so that you would know when to actually expect an ideal reversal in the market and when to also keep yourself in the market in the direction that the market is actually trending. So this is what you must understand. You should actually go back to the chart, back test these things, map out these conditions in your chart till you understand how to actually map out these things as easy as possible.